How's it going, everybody? It's Stas here, and in this video, we're going to be talking about the stock market, breaking down what happened today in the S&P 500, the Dow Jones, and the NASDAQ, and I also want to share with you guys the top breakout stocks that I'm watching and looking to trade right now as we're getting deeper into the month of May here in 2020. And many of these companies, guys, they just reported earnings, so I want to also break down some earnings reports, and these earnings reports have actually fluctuated their stocks up 10%, 15%. One of the stocks is actually up 20+% just today, which is absolutely incredible. And I also want to go over what I personally did in the markets today, as well as different stocks I'm involved with and options contracts as of right now. So if you guys enjoyed the video, if you find value in the video, hit that like button for me, consider subscribing to the channel, and also feel free to join our free Discord chat and Facebook group, link down below in the description box. So let's get right into it, starting off with the S&P 500, which had a pretty good day, up $32.77, up 1.15% on the day. And would you take a look at where we struggled yet again on the S&P 500? And this is a level that I've been talking about a lot on the channel as of late, and that level is at $2,900. It's a resistance from a couple weeks ago, months ago, right? It's also a main resistance based off this moving average, the 180 SMA here on the 4-hour chart. And if we zoom in a bit here on the S&P, you guys can notice back on the 5th of this month, we struggled breaking out of that point before we actually rallied to $2,950 a couple days ago. We struggled breaking out of $2,900 again. So needless to say, the S&P's been struggling a lot at 2,900. And for the bulls to gain more momentum, in my opinion, based off these technicals I'm seeing at least, the S&P is going to need to break that level, right? And from there, we might see a couple of different things occur. You guys can see the next resistance, the main level of resistance I'm seeing after, 2,900 is 2,950, right? From back towards the end of April, we temporarily broke 2,900, but ultimately we failed maintaining it. So 2,950 is a major level here on the S&P, and above that, the next gap that I'm seeing here could bring us up to, yet again, $3,000 on the S&P. Isn't that crazy, guys? Who would have thought? We hit 2,200 a couple weeks ago. Now we're all the way back to almost $3,000. So in the short term, if we break 2,900 to the upside, 3,000, 2,950 based off these technicals, those are very possible, targets for the S&P. And let's say we fail at 2,900 yet again tomorrow, guys. Let's say we fail, we break 2,850. We actually might be going down to 2,810, maybe $2,800 flat based off of, some previous levels here that I'm seeing. So 2,900, it's going to come into play tomorrow yet again, right? It seems like it's been the main level over the past couple of weeks, and tomorrow it's going to remain as a critical level because 2,900, it's really going to determine what direction, at least in the short term, the S&P's picking, whether we break above it or we maintain below it, right? And when it comes to the Dow Jones today, up 211 points, up 0.9% on the day. And notice, guys, just like the S&P, we're struggling under that 180 SMA here on the 4-hour chart as it is acting as a resistance, right? It's very clear. We got hit there on the 29th of April. We failed to break on the 30th of April, the 1st of this month, and pretty much every single day since the end of April, we've struggled on the Dow under this 4-hour SMA here, 180 SMA. So for more momentum, obviously in the Dow Jones, that is a level that we're going to have to break. And another thing that we are starting to see form here which isn't too good for the bulls, is a potential head and shoulders pattern, right? Left shoulder, head here, 24,700 peak, right? And now that we're seeing a bit of weakness, again, you guys saw on the 4-hour chart how weak the Dow looks, we might end up dumping, breaking this 180 SMA on the hourly chart, and from there, that could be the completion of the right shoulder on the Dow Jones, right? And, just like the S&P here, keep an eye on this 180 SMA potential break for the bulls to come in. And, if we break the downside here, 23,000, let's take a look at some different support levels. 23,600, 23,300. If we break those points, we may be going lower in the Dow Jones. And when it comes to the NASDAQ today, guys, up 1.3%, up 117 points. And like we've been mentioning on the channel, the NASDAQ is by far the most bullish out of the three major indexes based off of what we're seeing here in these technicals, right? We actually just hit a higher high today in the pattern. We're trending above both moving averages, being the 50 and the 180 here on the 4-hour chart. And we're well above the $8,900, $9,000 level of old resistance that I've been hoping, the Nasdaq was going to hold. So all of these points, point to, strong bullish momentum here in the NASDAQ, and that's mostly because, mainly because the tech stocks out there, the Netflixes, Microsoft, Google, Facebook, Amazon, Apple, they've been crushing it, right, and pretty much keeping up the entire market, not just the NASDAQ, right, which is, again, a tech-heavy index. So overall, those are some thoughts on the markets here. Those are some key levels to keep an eye out on, and pretty much what ended up happening today. So I'd love to know down below in the comments, what are your thoughts about the markets? And before I forget, today was actually the jobless claims numbers for this previous week, which came in at 3.169 million, and the 7-week total pretty much ever since this craziness, the shutdown happened with the whole crisis, the 7-week total is around 33.5 million people that have, put in for jobless claims, benefits, right? And a lot of people have been saying that the real number is a lot more than that. Who knows? It could be 40 million, it could be 50 million. Or it could really be a pretty accurate number here, because I've heard that it's been difficult to kind of, get through with these applications and so forth. So who knows if it's completely accurate? I'm sure there's a lot of others that are, still unemployed and trying to get through with the jobless claims and so forth. But that's what we're seeing here, 3.17 million, and the past 7 weeks, about 33.5 million. But it doesn't seem like the market reacted to that. As we've talked about on the channel, a lot of this is already priced in, right? The market already knows the jobless claims numbers are going to be poor, which is why it's not really reacting to it. One thing about the market is if it already knows about something, a lot of the time it's priced in. Usually surprise events that just come in and throw a loop to the market is what brings the market down, and it also moves the market up, right, in certain situations. So let me know down below in the comments, what are your thoughts on the market as of right now? I'd love to know what you guys are thinking. Now let's get into what I personally did today. What stocks am I involved with? What options am I involved with? As I did open a new position today, and I actually closed a position as well. So I really didn't do any new buying today other than buying a contract here, a couple actually options contracts for $35 SPCE. I bought $35 January 15, 2021 calls for Virgin Galactic. And if you guys were watching my video yesterday, you saw that I actually day traded Virgin Galactic yesterday, and I kept some shares for today's session at an average cost at about, I believe it was close to $17.80. So I kept those shares overnight. And first and foremost, guys, I locked those profits at about $20.70. I was watching this thing run this morning and heading into the afternoon, and I was like, there's no way I'm not going to lock in this massive gain that I have over the past literally day alone. I was up about 14% on those shares I bought literally yesterday. So I liquidated the position there in SPCE right around this $21 level of resistance, right? So I locked in profits there. That was my first trade. And a little bit earlier in the day, again, I bought those contracts here on SPCE. Take a look at them, guys. There's a lot of open interest in these contracts, which pretty much shows that it shows the total outstanding number of contracts out there. And typically when you're looking at options, guys, a little tip here, when you're looking at open interest and you're seeing these specific dates, these specific strike prices with the open interest that's really high, that means obviously a lot of people are interested in those options. That could be, a sign that, okay, a lot of people are in these options. A lot of people believe that this stock could be at this price or above by this date. So it could be a good idea to get in them. That's kind of one way to look at open interest. Obviously, you don't base your decision off of open interest, but there's a lot of open interest for these options, let's just put it that way. And I personally got in at $2.41 a contract. I didn't lock in profits, but I'm simply holding. They're currently at $2.73 as of right now that I'm filming this video. So I'm up about 14% on the options as well. And today, guys, we saw GDX, which is a gold miners ETF, have a ridiculous rally, up about 4% on the back of gold having roughly a $40 day today. Went up $40 today. Gold was up about 2 to 3%. Very, very strong day in gold. So you guys know I actually had call options on GDX still open, and those actually expire in August. Let me take a look here to get the exact ones. August 21, I had GDX, or rather August 20th, GDX $35 calls. I actually bought those a couple weeks ago, if you guys don't remember, at $2.40, and I ended up just locking in the profits today at $4.11 a contract. So I locked in some profits a couple, I think that was last week on some calls in GDX. Now I just fully closed out the position, locked in profits. Now I'm looking to potentially get back in to these options, or maybe into some shares of GDX once it maybe pulls down a bit. I could have sold out at a bad time, but in my philosophies, guys, when it comes to trading, is profit is profit. It's never bad to take profits. So that's what I ended up doing. About a 70-80% gain on those options, up about 13% on the SPCE options, and I also sold out of the SPCE shares. All of these stocks, guys, again, in the ETF here, GDX, I'm looking to re-enter, guys. I'm still bullish on these, but I'm getting in and out on the trend. That's kind of the whole goal, as when it comes to being a trader. So let me know down below in the comments, what are your thoughts on those moves, those options? What are you guys doing? I would love to know, as always. Now let's get into these top breakout stocks and some earnings reports that have been fluctuating these stocks very heavily. The first one being Uber, guys, ticker symbol UBER. And Uber today was up 11%, guys, up back above $30 per share, actually close to about $31 per share, on the back of earnings coming out as Q1 EPS negative $1.70. So they lost $1.70 per share, and that was actually way worse than estimates were. Estimates were 83 cents, negative 83 cents. So a lot worse than the estimates there when it comes to EPS, but revenue actually beat. Revenue came in at $3.54 billion versus $3.51 billion, and they actually lost about $2.9 billion in the quarter, down 1.4 versus the $1.4 billion estimated. So they actually lost 2 times what they were expected to lose here, and they're actually cutting, as many of you guys know, about 3,700 jobs. They're cutting a pretty sizable chunk of their workforce, and the stock, again, is up a ridiculous amount as of right now. You guys can see, actually, wait a second. Wait a second. Okay, yeah, you guys can see, wow, the stock's up to $34 per share. That is insane, right now after hours. That's pretty incredible. So we're seeing the stock go up 11%, and now it's up another what is this? Another couple percentage points, 6-7% here, after hours, which is absolutely incredible. So when it comes to Uber, we're taking a look at a pretty overextended stock at this point. We're getting to levels that we haven't been to. Obviously, we were at 41, but if you take a look a couple months ago, back in September and October, you notice how $34, right around where we are now, 34, 33, that was a resistance. So for me, guys, Uber, I'm not looking to FOMO into it as of right now. I want to see a bit of a pull down, maybe down to about 31.80, maybe down to about $32. If we test, this old resistance as a support from back in, the end of April, we hold that could be an entry point here. So that's kind of what I'm looking at here when it comes to Uber. Another stock that did very well, it's a competing company to Uber, it's Lyft, guys. This is the one that was up 20+%. Incredible. Up $5.66 on the day today. And they also reported earnings of negative $1.31 per share, and that actually compared to the negative 64 cents estimated, so they missed completely on EPS there, but revenue actually topped by a pretty decent margin for Lyft. Revenue came in at $955 million versus the $897 million estimated. And they're also at a point where, like many businesses, right, they're looking to cut costs at this point. They're looking to cut about $300 million by Q4 in costs. So that's pretty incredible. Their cost-cutting measures here for Lyft, trying to lean down the business. And I guess that's a good sign, in this time period where there's a lot of uncertainty, there's a lot of pressure on businesses with unexpected expenses and so forth. And when it comes to the technicals here on Lyft, we were talking about this earlier in the Discord chat. You guys can see, I was drawing this little channel here. It was looking solid. But what I was looking at in particular earlier was whether or not $31 was going to break. That was a level of resistance from back towards the end of April. A couple weeks before that, it was a resistance as well. So the fact that we broke that's very positive right now for the bulls. What this means, in my opinion, is Lyft has a chance to keep breaking up here. This momentum could continue, in my opinion, up to maybe the top part of this channel, the top portion of this channel, whether it's $35, $36, 37, 38. I think Lyft, based on the technicals here on the current pattern it's on, I think it could hit that level, and that's kind of what I'm watching for here as a potential trade over the next couple of days and weeks. And another stock that just went parabolic today, and we talked about this yesterday, guys. It's funny. We talked about how Square, it might have been a bit of an overreaction when it comes to the earnings report, or the earnings report yesterday. And you guys can see the earnings report came out. It dropped down like a brick from $69 to $62. And I talked about, guys, listen, a lot of these companies, they report earnings. The stock overreacts to the downside, and there's a lot of potential, or not a lot of potential, but there is sometimes potential for the stock to rebound back up if it overreacts. And that's exactly what we saw. We dropped from $70 nearly to $62. We filled the entire gap back up to $70 here in the pre-market session alone, guys. And this morning, once we broke out of 70, the stock just went parabolic, right? We broke $70. We broke the next resistance even at $74, and it seems like we're holding that into the close today. So am I looking to chase Square at this point? No. It's kind of similar with Uber. to the point where it's a bit overextended, a bit overbought. But I'm interested in seeing, are we going to hold $74 here, maybe slowly fill the gap up to 78? Or if we break 74, guys, this thing, it could be bound to go back to $70, $71, and that actually could be a good entry point for a swing trade as well. So Square, keep an eye on it. If it cools off, I'm definitely interested in taking a position. And another massive runner, guys, today was PayPal. This thing went crazy, up 14%, up about $18 per share. And you guys know I've been bullish on fintech for a while now. For as long as I've been making this channel, videos on this channel, I've been mentioning that, right? I have a significant investment in PayPal in my long-term account. So needless to say, today was a pretty solid day, right? They had EPS of 83 cents versus 76 cents estimated. So they beat on EPS. Revenue came in at $4.62 billion, which actually came a bit short versus the $4.75 billion. But why the stock is really flying at this point is because over the quarter, they added 20.2 million new accounts, including 10.2 million that came from its acquisition of Honey, which is pretty much kind of an extension here that gives you coupons and deals on several different products online. Go check it out if you guys don't know about it. And this ended up turning into 10.2 million. Let me go back here in my notes. 10.2 million came from the acquisition of Honey and ended the quarter, PayPal that is, with 325 million active accounts. And excluding Honey, they still would have had 10 million new active accounts, which would have been a record for PayPal regardless in a first quarter, right? And another solid piece of news here, PayPal added 7.4 million net new active accounts, which more than double the average number added per month during the first quarter. This means that PayPal added about 250,000 new accounts per day throughout April, a remarkable acceleration in growth. So that is, the main catalyst here, which completely and utterly exploded the stock here, up 14% today. And yeah, it's breaking out, guys. Many of these stocks are breaking out, but the key is now we have to see, are they going to cool off and maybe present an opportunity over the next couple of days, or whether or not they're not? Because I'm not looking to force anything. I'm not looking to throw money in PayPal here at $147. I much rather see if it cools off. If it gets back to, let's say, 127, 130, maybe with a couple of trading days here, we'll see what happens. And then from there, we might be able to build a position, right? Another stock which is cooling off a bit here, which is good, down about 1.5% today, is Shopify. This one hit a peak 742, and now we're maintaining the level that we actually talked about in yesterday's video at about $700. We talked about how if Shopify is able to pull down, retest a previous resistance as a new support and push up from there, that would be extremely bullish. And that is what Shopify is trying to do as of right now. So I'm definitely keeping an eye on it. And Tesla, ticker symbol TSLA, is another one, down about $2.50 today. Nothing crazy, down about 0.3%. And notice the hardcore consolidation on Tesla right under $790 to about $800. What that tells me is one thing: 800 is a pretty strong level of resistance, right? No doubt about it. But it also tells me if we're able to break 800, watch out above, because I'm thinking Tesla's going to be able to break up to 820 at least, and maybe back up to 850, 880, 890, 900 based off of this level that we saw after they reported earnings. I'm really thinking that if 800 breaks, a lot of momentum is going to come in from there. And another stock that just went parabolic yesterday as well was Beyond Meat, ticker symbol BYND. But today we actually saw a 3% red day, down about $3.50. But this is good because we're seeing some profit taking. We're seeing the stock settle down a bit. And believe it or not, guys, it seems like it is continuing the uptrend. Today we tested 116, old resistance from the 24th of April, as a support, and we're rallying back up. So for tomorrow, 125 is going to be critical. Notice how we failed at 125 today. We're testing it after hours here. If we're able to break it, I'm thinking we can hit 130 and above on this stock, especially with the hype behind it at this point. And the theory that with meat shortages across the country, and the theory being maybe people are buying more of this stuff, right? The fake meat, since they don't have the option to try the or to have the regular meat, right? The real meat per se. So another one, and to end off the video here, is going to be the UGAS DGAS combo, right? And these trade based upon natural gas /NGK20. I believe is the ticker symbol here for these May contracts. Actually, wait a second. We're on the June contracts. I think it might be M20. NG/NGM20. Yes, this is it. You guys can see that overall here, the trend of natural gas as of late is slowly starting to reverse to the upside, right? Clearly, we downtrended from 240 to 160. Now the trend is turning up, right? We're making higher highs, higher lows, breaking out of major moving averages. This is very good. And today, we got a pretty solid confirmation, at least as of now, that natural gas is maintaining a higher low at about 190. And what does this mean? This means that UGAS, which goes up whenever natural gas goes up at a 3x rate, could have a lot of potential in the short term here, if we're able to hold 190 and if it's able to pop there, right? Because from where we are now, $26 up to 38, that is a 31% margin of profit that we could potentially make, right? So if that move happens in natural gas, we might get this pop in UGAS that could take us from 25 up to 30, 31, 32, and that is where I'm looking to catch the move in UGAS. And let's say, for example, natural gas fails to hold that 190, then we can play the inverse, which is DGAS. It goes up whenever natural gas is going down. So those are a couple that I'm watching. Those are some earnings reports that I was going over today that I was looking deeper into, and some stocks that are breaking out as of right now. So if you guys did enjoy this video, if you did find value in this video, hit that like button for me. Consider subscribing to the channel. And if you guys actually want 2 free stocks from Webull valued up to $1,400, you can actually use my affiliate link down below in the description box. All you have to do is put in $100 into the account and you get those 2 free stocks, again, valued up to $1,400. So I'll catch you all in the next video. Thanks again for watching. As always, stay safe out there, guys. Peace out.